Hi everyone. Again, thanks for joining this session. Today we're very pleased to have Will to share with us his experience in the investment management space. Just a quick introduction about what this session is going to be about. Will is the Chief Investment Officer of QDN Partners. And today we're going to get an overview. He's going to walk us through the purpose and the structure of a family office, as well as the current industry trends, advantages and disadvantages of working in one. We'll feel free to ask any questions during the session. We'll also have some open Q&A after the presentation. So, Will, thanks again very much for sharing with us your insights, and we're looking forward to see what you have to share with us.
Wonderful. Thank you, Andrew, and Kyle as well. See you there. Good to see you. Thank you, everybody, for joining us. So I guess I need to do a share screen. Andrew, is that?
Yeah. You probably want to share a screen. You should be able to do so. Can you try? Okay, great. Yeah, I can see it now.
Is that visible to you? Okay. Super. So just a quick overview of what I'll be covering tonight. So I'll just give a little bit of my professional background so you have some context for where I'm coming from. I'll provide a little bit of an introduction to what is a family office, kind of explain that. Talk about some industry trends, what's going on now in the industry, what I see as kind of emerging trends in this space. What is the relevant experience or skill set that somebody in a family office would be looking for from a hiring perspective? And then from my own viewpoint, what are some of the advantages and disadvantages of working for a family office? And as Andrew said, I hope to be able to get through this relatively quickly to give us plenty of time for questions and answers at the end. So happy to. I always find that usually Q&A is the most interesting part of any presentation. So if you want to take a nap now, go ahead, and then we can you can wake up at the end with any questions you may have. Let's see here. Okay, there we go. So so I have a background. Well, let me just back up one second. I served a mission in Russia, and so I had 2 years of experience living there, and that actually propelled me into my first employment after I finished my university degree. And so I worked for a metals trading company in the US. We had operations as well in Estonia and in Moscow, in Russia. And then I worked for a US headquartered consulting company. We had offices really around the world, 20 or so offices around the world. And we had a number of really large clients in the oil and gas sector in Russia. And I'll touch on one of those later in the presentation. But that's kind of where I've got my feet wet, was really working in these two sectors for the first 6 years or so after I finished my degree. Then I took a job with HP, Hewlett-Packard Enterprise Services. So I was working on, as a senior project manager, working on large-scale network integration projects and helping companies really solve the problems of multiple layers of different operating systems and technologies and application layers and things that just really don't communicate well together, and trying to bring them together into one comprehensive solution. I did that for a few years, and while I was there, I had two different projects I worked on for two different companies. And these two companies were owned as part of the portfolio of a private equity firm based in New York City called Welsh, Carson, Anderson, and Stowe. And the two principals at Welsh Carson approached me and said, if we've seen your work working on the consulting side for HP, and we'd be interested in having you come over and help us out with our technology practice at the private equity firm. And so I thought that might be an interesting jump to kind of more traditional finance and investing. And so made that jump over to the private equity firm, which was based in New York City. and worked exclusively on the buy side, which is basically responsible for sourcing acquisition opportunities for the portfolio. And again, focused in the technology practice. And after working there for about 4 or so years, the two co-presidents of the private equity firm approached me and said, we have this, some of our private wealth in this investment vehicle, but it's really passively managed. We don't have anybody managing it really, and we've tried to do that on our own, but we just don't have time because we're managing the private equity firm, which is really our most important thing. But we've been looking for the right person to come in and help us manage our private wealth portfolio. So they said, would you be interested in coming over to head up our family office? And I said, yeah, that sounds really interesting. I would be my own boss, and that was very attractive. And so I said, yeah, sure, let's do that. After about a year of doing that in the US, they said, and we came together, the three of us, and said, decided that it would probably make sense for me to be closer to where our portfolio is, which is primarily in Europe and in Asia, geographically speaking. So we took the decision to open an office in Zurich, Switzerland. And so we moved to Zurich, lived there for about 4.5 years, managing the portfolio, and had a couple of employees locally in Switzerland. And then also we have a small, primarily back office team in New York that supports us as well. And then after 4.5 years or so, one of the two co-presidents of the private equity firm said, well, I'm going to kind of go into semi-retirement. I don't want to be operationally involved in the private equity firm anymore. And so let's kind of do a full 360-degree review of inventory of our lives, financially and otherwise. And so they did that. And as part of that process, we discussed where they want the portfolio to go. And we agreed that probably in the next 10 to 20 years, there's going to be a lot more growth in the Asia market than there would be in the European market. So we decided to shift our portfolio allocation more heavily toward Asia. And that's what precipitated our move to Singapore in August of 2019. So into the family office. This is just kind of an overview of what I'll be covering really in the next few slides in the intro to family office section here. One note on terminology. So some people refer to family offices as home offices, but this is not a correct term to use to describe it. So those in the industry who work in private wealth management, who work with family offices or for a family office, home office means for most people where you work during COVID. A family office is really referring to what I'll be speaking about during the presentation. So they're two different things, but for some reason, some people associate family with home and they get the two confused or conflate the two. So just one note on terminology that I hear sometimes from folks who are maybe outside of the industry. Another note kind of on terminology, there is the idea of a single family office versus a multifamily office. A single family office, and I'll touch on this a little bit more later, is just one family. Multifamily office is usually a third-party service provider. Again, as a general rule, the family offices are created because of some wealth that is generated within a family business. And the financial capital that is used for the investment portfolio for that family office is the family's own wealth generated by that family business. Family offices are really focused on multi-generational wealth transfer. And I'll just share with you this rule, this 3-generation rule, which is that in the vast majority, it's around 70 to 75% of all families go through all of their wealth that was generated in that first generation within 3 generations. So there's almost no money left in most families from that tremendously successful first generation. And so there's a need to really look at this issue of multi-generational wealth transfer. And then I'll touch on a little bit later. There's some interesting parallels I find really between the family office idea and some of the principles that we believe in the gospel, such as provident living, family, the importance of family councils, and doing family history, as well as kind of having a short-term perspective versus a long-term perspective. So the idea of a family office really originated with, as I mentioned, successful family businesses and a desire by the patriarch and the matriarch of those families to formalize and secure their legacy for many generations to come. That typically has a financial component to it, but it has more than that usually, or often. There are oftentimes philanthropic interests, a desire to give back to society in some way, whether that's their local community or to their country or to a certain cause. Also of interest is how to maintain harmony within a family. Even in small families, we know that there can be discord and disagreements. And so how do you, through multi-generations, maintain a shared vision and a shared culture, common culture? How do you create that and really try to develop that so that it's not just the transfer of the money, but it's also transfer of culture and beliefs and principles. Investment capital, again, to highlight this, typically there's no outside capital in an investment portfolio of a family office. It comes from the family's own wealth. Some of the benefits that are derived from setting up a family office for a wealthy family include some of these things that I list here. Obviously, you are able to maintain your privacy and discretion much more, you have much greater control over what happens with your money and with your reputation because you're not outsourcing some of these services. You have the independence of not being dependent upon somebody else, a third-party service provider. You have time and cost savings that are associated with that because you have a dedicated staff that is directly accountable to you, that you can pick up the phone and call at any time to find out what is the latest on our investment portfolio. Is this trend that I'm seeing relevant, do you think, to our portfolio? I need help immediately with this problem that just arose in my family, so I need somebody to jump on that. There are just all kinds of reasons why having a dedicated staff, for example, and having your own family office construct can be tremendously beneficial. Typically, I'm going to focus on single-family offices. Just one note on multifamily offices. So multifamily offices, as I mentioned, is a third-party service provider. So single-family offices, as I highlight here, typically you have a team size of you could have one person or all the way up to 300 or more, so multiple hundreds possibly. Assets under management for a single-family office are usually no less than 100 million as a rule of thumb. And the reason for that is because there are certain fixed costs associated with having a family office. And if those fixed costs exceed, if the overall operating costs exceed usually around 2 or 3%, then it's difficult for it to make economic sense. So because there are certain fixed costs, if you have assets under management less than 100 million, it begins to eat into or erode the principal amount of the portfolio, value of the portfolio, and therefore, it oftentimes makes sense to outsource a lot of those services where you can do so more economically than maintaining a full staff yourself if your portfolio is smaller than 100 million. The multifamily office, again, to highlight that, is it's a business that somebody sets up to provide the services that a single family office would, but to families who maybe don't have as much money, who want to be maybe more efficient in the way that they operate, and they have a more limited mandate in terms of what they're trying to achieve. And this is to kind of the second bullet point here. A single family office can have a very wide range of requirements or mandates. It typically includes management, wealth management or asset management, but it can also include full-time household staff. It can include a staff dedicated to arranging personal and business travel for the family. It can include property management. They may have multiple houses or real estate around the world that needs to be managed. They may have an in-house lawyer as well to deal with any kind of legal issues as kind of a first look before taking it to outside counsel if necessary. The there may be an expert in family governance, how a family should be governing themselves in terms of family relations and those kind of those issues that are specific to a family. Financially educating, so educating your family on what does it mean to have this wealth. There's a certain responsibility and accountability that should come along with that. And so teaching the future generations about that responsible handling of that gift, of that blessing, is important. And then, of course, succession planning and philanthropy. So philanthropic endeavors and hobbies such as that. Or there may be other hobbies outside of philanthropy, such as aviation, maybe, for example, or something else, or boats, whatever that may be for that particular family. And then succession planning, of course, is looking at who may become the second generation patriarch. Who's going to be, are you going to have members of the family employed as in the executive functions of the family office in the future, or not? Is there going to be bringing in outside folks? A bit of history here. The Rockefeller family, which is a famous family in the United States, in the late 1800s really pioneered the idea of the family office. It didn't catch on in a major way until the 1980s, and has really become much more mainstream and kind of in a funny way has become kind of fashionable or a status symbol to have one's own family office. That's much more recent, of course, but really with the tech boom starting in the early 2000s, there's been an exponential growth of multimillionaires and billionaires. And this has really caused the industry to grow tremendously as a result. And then finally, this thought here of when you've seen one family office, you have seen one family office. And by that, I mean, there are no two family offices alike. They're all very different and unique in the way that they're structured and their needs and the vision and all those things are very unique to each family. So each family office is typically very different from the next. Just to give you a sense of the organizational structure that might exist in a family office, ours, QD & Partners, is smaller than this. So if you look in the upper left corner, the green boxes, that's the family, the principals. Then you have the executive team. And in our case, we have just myself as in the executive team. And this isn't shown here, but usually there's what's called an investment committee. And those are the individuals involved in decision-making process and the executive process of the investment portfolio specifically. And so in our case, the investment committee is myself and then the two patriarchs in each family. Then you may have different investment teams. You may have one investment team with everybody kind of sharing. In this case here, they have some examples of different assets, asset classes that might be in a family office's portfolio. And there may be dedicated teams as a result focusing on each of those asset classes. Then you have the back office function on the right in the gray box, like the accounting, operations, HR, public relations. And what's interesting is in many family offices, you may, typically the back office will support multiple different functions within the family office. So not just the investment portfolio from an accounting and HR and operations and public relations perspective, but also if there's a philanthropic arm to the family supporting that, and maybe some other interests or other portions of the family office. So many family offices form what's called a family council. This is a foreign concept to many people, but obviously we believe in the idea or the concept of a family council. And so it's really interesting for me to have seen some of the principles that we believe in validated by some of the best practices in the family office industry and why it's so important to have these family councils. Obviously, in the case of the family office, we're talking about slightly different application because we believe in family councils, no matter the wealth of the family or the interests of the family, right? That there's value in having that in any family. But for the family office in particular, it is trying to create a linkage between all the different generations and the varying parties that are involved in that family office. And obviously you end up with situations where with the children of the patriarch and matriarch, they end up getting married to individuals from outside of the family. And so you bring in, with each successive generation, you have more and more individuals that were not part of that family to begin with. And so you have, again, these conflicting interests potentially. And from time to time, you see members of the family fighting with one another over the wealth of the family, different assets or responsibilities, things like that obviously where you have a family, having a family council would be crucial in trying to resolve some of those issues. A family constitution is also a best practice in the family office industry that helps provide that vision and the purpose for the family, and also can outline, as noted here, the family values, responsibilities of family members, as well as remuneration. So the compensation that family members receive. Some of these things are kind of, for me at least, if you look at it on a small scale, like my family, for example, we all have responsibilities in our family, right? Whether it's, and my children have their chores, we call them chores, let's say. Those are family responsibilities. But adults have their own set of responsibilities in a large family office structure, right? So those are typically outlined in very specific detail, as well as how the patriarch and matriarch want to compensate family members, if at all, how that may work. Having a long-term view of investing is consistent with the principles of provident living and having the eternal perspective that we do. And so again, this is kind of the idea of provident living and some of the other principles that I mentioned, doing family history, understanding where you come from, what is that family legacy you should be taking on and carrying forward with you. These are all important aspects of a family office as well. And again, kind of a final thought on this aspect of it. Really, again, it's the best practice. Most sophisticated and well-run family offices are focused more than just the financial aspects of things. It's a very holistic approach to things. Moving on to some industry trends. New wealth is one of them. And as I mentioned before, there's just been this incredible growth at the highest end of the wealth spectrum around the world, but especially in Asia and in particular within mainland China. Just to bring in some statistical context, between 2013 and 2019, the number of Chinese billionaires grew by 2.6% or 2.6 times. So that's tremendous. Tremendous growth over a 6-year period of time. And again, in 2019, so kind of the most recent statistics, China had 324 billionaires, Hong Kong had 71 billionaires, and Singapore had 30 billionaires. And then, of course, you look below that and you've got lots of millionaires. So this industry has seen, family office industry has seen incredible growth through this last 15 to 20 year period of time. So the idea of alternative investments, alternative investment classes has really emerged in the last 15 to 20 years. Traditionally, historically, family offices going back, say, before 2000, were very conservative. Again, the money comes from family businesses. Those family businesses typically were run on a very conservative basis. And the views of those principles were typically, we want to preserve our money for future generations. There has really been this emerging trend of being more aggressive with the investment portfolio, and such that it's more than just this fixed income and publicly traded equities that has been historically the case. Moving into more exotic or alternative investment classes such as private equity, early stage venture capital, and even getting into direct investing in startups. That's kind of a popular thing that's happened in the last 10 to 15 years in particular. Collaboration. So there's been the idea of collaborating or partnering with other family offices who are like-minded and there's a lot of synergies that can really be discovered through this idea of collaborating between family offices who have like values or similar ideals. That could be deal sharing, that could be sharing resources, and it could also be investing together directly in some companies. So you bring in 2 or 3 different family offices on a deal to a startup that may be of particular interest. Maybe it's involved in recycling or in alternative energy, or some interest that is an overlap between their philanthropic interests and their investment portfolio. So environmental, social responsibility, and corporate governance, ESG, that's generally a trend that's been present in the mainstream investment world. Hedge funds are involved in that. A lot of retirement funds are requiring, pension funds are requiring their asset managers to invest in ESG funds to be more sustainable over a longer period of time. And that's also true for family offices. In many cases, even more true. They've been kind of at the leading edge of many of these trends, and in particular with ESG, because they have the flexibility to unilaterally decide to do something like that. And so they can move very quickly and move into these new emerging areas. And there's also can be, to the point on the bottom bullet point there can really be a motivation to be that force for change and being a leader amongst other families and in different communities and around the world to show that the governments, for example, that there really is a need to move faster on some of these policies. Then just kind of some random other interests, not random other interests, but other interests. There's been a realization that you can take some of your portfolio and allocate it to other things other than investing and still receive that return on investment, if we call it that. So that includes philanthropic interests, as well as investing in art, committing money to research grants or endowments at universities, things like that. Those are also increasingly popular to do. And in many cases, strategic philanthropy is one of the best tools that a family can use to preserve the harmony among family members, because it's often easier to align interests along a moralistic or morally based initiative, such as global warming, trying to reduce that, climate change, moving from fossil fuels to alternative energy sources, things like that. Most people feel that moralistic interest or commitment to doing something like that. In terms of relevant experiences and skills for working in a family office, if we're looking at just the investment side, really the asset management side of things, we're talking about probably nothing surprising here, but we're talking about having a strong background in asset management, or having worked in private equity, venture capital, early stage, or in some sort of fund management, whether you're working for a hedge fund or sovereign wealth fund or something like that. Having experience in those areas is really important. I would also say that there are kind of 2 ways of approaching it. Having a broad-based experience in multiple different asset classes would be interesting, but also having very deep knowledge in one area, that may also be very interesting to a family office that's looking for an expert in a certain area to add to their portfolio management team. The ability to work with ambiguity or to work independently and in a very small team. This is crucial. Family offices are very small organizations, and oftentimes you're just expected to do your job. You may not even know how to do it, and so you have to be resourceful. You have to be able to work without maybe having a very clear vision many times on what the family wants. They may just say, this is our idea, figure it out. But for me, that's one of the interesting aspects of the business is it's also, okay, I've got to figure this out and problem solve. So that's kind of, for me at least, I enjoy that aspect of things. and bringing a team together to solve that problem, whatever that is, and then presenting that to the family. Having a high degree of emotional intelligence. What do I mean by this? It's really important to be able to understand how to manage the interpersonal communications with a family. Families can be very complex organizations because everybody is very different. There are conflicting interests. Some people are honest, some people are not. Some people manipulate, some people don't. And so it can be very difficult to understand how to maneuver. So having that level of emotional intelligence is really, really important. And then also really finding an alignment with the family office culture. So understanding what the family is trying to achieve and making sure that that's something that you're okay with, that you're comfortable with, or even better, that you're passionate about if you agree with and align with their interests. There was one of my employees in Switzerland had been approached by a family office, and the initial approach was a little bit opaque. And it turns out that it was the family office of an African dictator. And he ended up realizing, okay, this is not probably going to be aligned with my values and my interests. So no, thank you very much. So it's really important to understand who you're actually going to work for at the end of the day and what it is so you really have to do your own research to make sure that you're not putting yourself in a situation where that you would regret, when you step through the door a few months later, you realize this is not for me. And then also it can be a challenge to find opportunities in family offices because it's typically off market. It's not, sometimes they do publish their job postings, for example, but oftentimes it's really word of mouth. So building a professional network is really key to finding those opportunities. And I'll touch on this a little bit later, but a lot of family offices will headhunt talent in like medium to small size investment funds. And the reason for that is because that individual then is usually used to having a disproportionately high amount of need for independent thought and being able to function independently and taking on significant responsibility, typically at a younger age in terms of your experience in the industry, and then culturally also working in a small group and a small team. So having that professional network, understanding, knowing people who may be able to say, hey, I heard about this opportunity with this family, would you be interested, kind of thing. That's oftentimes how those opportunities are found. Just to give a little bit of flavor around Singapore and family offices, right? So we're in the Singapore market. There are approximately, as of 2020, there are approximately 200 single-family offices in Singapore with assets totaling around 20 billion. I like Singapore as a market for family offices for a number of reasons. I think that Singapore will continue to grow in terms of the number of family offices that are coming here. A number of Americans have opened up family offices here. A lot of Chinese are coming here, and there are a number of reasons why. The Singapore government passed this law, introduced this idea of a variable capital company in January of last year. This is meant to encourage ultra high net worth individuals. It's a different kind of category of company. We can go into another time possibly, but that's meant to encourage or make it easy for families to function, to set up their family offices and manage their portfolios. There's also, for foreigners, a pathway to permanent residency here in Singapore, and that is through this global investor program. So if you're wealthy enough, you can buy your permanent residency here in Singapore. In terms of front office, just a little bit about family office structures. So they're typically hiring people to fill positions as relationship managers, as discretionary portfolio managers. What that means is, in plain English, is you're talking about a very specific investment class or part of the portfolio that you want somebody to come in and manage. So discretionary meaning it typically is a dedicated idea that they want to have somebody manage toward. So it could be like an ESG fund that they want to make part of their portfolio, for example. They're looking for investment advisors, traders, public and private and public equity investment professionals, analysts in various industries, and then, of course, also financial controllers, folks who can tax optimize for them, and then the back office. Also, you have payroll, accounting, and then compliance, legal, and operation support. And as I mentioned just briefly a little bit ago, oftentimes they hire from mid-size asset fund management firms, fund services firms, private banks, investment banks, and independent private equity firms. So some advantages to working for a family office. Oftentimes you get a better work-life balance than traditional corporate and hedge fund or private equity roles. That's because they operate not, on a more reasonable working week schedule. Oftentimes working for private equity funds, private equity firms, or hedge funds, places like that, it can be brutal. It can be brutal in some family offices as well. It really depends on the approach. So that's why it's important to understand the culture of the family. But definitely in across the board in general, it's safe to say that there's more of a work-life balance because the family wants that for themselves and they believe in that for their employees. There is also a tremendous amount of financial stability. There's no need to comply with monthly or quarterly performance requirements. You don't have to report, like public companies do on a quarterly basis with their financial results. And so there's just the ability to really have a long-term perspective on the investment portfolio and not a need to make quick knee-jerk reactions to things that would require certain performance to meet certain performance objectives or deliverables. There's kind of a family-like work environment in many family offices, so you feel kind of like you're working as a family, which is also kind of a nice feeling, lower stress, and you feel like you're more working for a cause in a way than you are working for kind of this soulless corporate entity. And then also there can be a lot of autonomy to perform work requirements. So you get to really kind of chart out how you think you need to problem solve whatever challenge that you're facing. Which, if you like that can be really fun. Disadvantages. So cultural fit is a critical factor. I pointed out that African dictator earlier. You really want to understand what that family's culture is like, and you want to make sure you have a good fit there. If you don't, then it can be very bad. Also, the family office is can be very fickle, actually, in some respects. So you're subject to the whims of the family, and if the patriarch dies, the matriarch dies, then you have to worry about the succession planning, the implementing the succession plan, which can bring somebody to the head of the family that has a completely different perspective than the generation that just passed on. That can be a huge challenge in terms of the transitioning. They may want to downsize the staff. They may want to plus up the staff. They may want to completely change things. And there was one family office. So one of my employees in Switzerland had worked for a family office previously, and that it was a member of the Qatari royal family, and they had some assets that they had in a family office structure they had set up in Switzerland. And they decided all of a sudden after 4 or 5 years that they wanted to draw that down and set up a structure in the Netherlands for a variety of reasons. And so all of a sudden my colleague, who is Swiss and wanted to stay living in Switzerland, found himself without a job, very quickly and kind of unpredictably. There's also a lot of political risk potentially, or legal risk related to some families. And I just provide a few examples here. Jimmy Lai is a well-known media mogul in Hong Kong. He's gotten himself in trouble a bit with the new national security law in Hong Kong. And also one of my clients, a gentleman named Mikhail Hodarkovsky, a Russian guy who was the owner of Yukos Oil Company in early to mid 2000s. So 2003, he was arrested, and I spent about a year in Moscow in the courtroom with him every day in his trial, trying to represent his interests to the international community and trying to fight for his assets in Russia. And of course, when President Putin is on the other side of that, you're not likely to win. But in any case, that's another example where all of a sudden a lot of his assets, which were tied up in the equity of the oil company, just were frozen and were basically expropriated by the government of Russia. So he had some money outside of Russia, but that can change immediately overnight, instantaneously, the whole perspective on the family office. And then the Sackler family, this is a family in the United States. They own a company called Purdue Pharma, and they were one of the largest manufacturers of opioids for pharmaceutical use. And they were found guilty of being involved in pushing opioids in the United States and being one of the root causes of this epidemic that the United States has been dealing with. And so they're under a lot of legal pressure now, including multi-billions of fines. And so again, you can just find yourself one day everything's fine, the next day the family is being attacked for a variety of reasons. And then finally, there can be an expectation on the part of a family to get a good deal on their employees. So in some cases, they really try to economize and they try to squeeze the employees of a family office sometimes. Sometimes that's not true. But in some cases, that's been the case, and it can be challenging because despite their tremendous wealth, they come from maybe a background of not having had that wealth, and so their mindset really is, I need to preserve all my wealth, including every last penny, and so that can be a challenge. So that's the end of the presentation. We can open it up for Q&A.
I need to go in and take questions.
Thanks, Will. Do we have any questions from the audience? Feel free to just go on mute and present a question.
Hi, this is Selena. I have a question.
Fire away.
So I have a few short questions. So one of it is, what's the difference between a family office and also just having a relationship manager or like a wealth manager in one of the bigger banks? That's the first one. And the second thing I'm interested to find out a little bit is, how do you measure the success of your portfolio, given that it covers such a big, a variety of different things? And I think the other one that I was kind of curious about is, are you able to make recommendations to the mandate? Like if, let's say, you see something that's interesting, which is not currently covered in the mandate of the portfolio, and you're able to suggest to the family, here, look at this. This is something, or like gold or Bitcoin is something that's new and upcoming, and see if they are interested to invest in it. Or are you able to just decide on, okay, this new Bitcoin thing is new and upcoming, and I want to put the money in it, and you have that discretionary ability to do that? So I think that's a few of the questions that I have in my mind when I was listening to the presentation.
Super, thank you, Edlina, for those questions. So I'll start off with the difference kind of between a family office and relationship wealth manager in a bank. And this is a great distinction between family offices and with the way that somebody else may manage their wealth or their assets. Again, it is possible for somebody to have maybe a family office and have some of their assets managed by a wealth manager in a bank. That's certainly possible and not unheard of. But the idea, when somebody makes the commitment to a family office, typically it's because they want to have that dedicated staff to really focus on them 100% of the time. And whereas a wealth manager is going to have typically at least a few, if not maybe a dozen or more clients that they're having to whose interests they're having to balance, right? So having that family office is a tremendous luxury, obviously, of having somebody, a team of people who are completely dedicated to you 24/7. And that's really the largest kind of distinguishing factor between the two. Let's see here. So, how to measure success of the portfolio is another one. So we definitely benchmark ourselves, our performance against pretty traditional measures in the market, and to give us some perspective on how we're doing. But it really, I would say the way that you measure success is dependent upon the family. Again, some may have a very defensive stance, and so they don't want to be involved in venture capital, venture investing, early stage stuff, because that's super risky. And you basically have to take the approach in that asset class of I'm okay if I get nothing back. And most families are not okay with that, generally speaking. They don't want to just put their money in with actually a fairly high chance of not getting any of it back. So that's why they typically have a very diversified approach to things. So we look at the pretty traditional benchmarks, I would say, just to say, okay, are we returning on average, between 7 and 10% on an annual basis? Are we providing an incremental benefit in some way to some other ETFs or other actively managed funds, let's say actively managed ETFs or actively managed funds, that where they would be paying a management fee of say 2% typically, and maybe they have also a carried interest of say 20% from the upside to a certain benchmark performance level. So if we can beat those numbers, then by definition we are more efficient, more economical than taking the money outside of the family office and taking it somewhere else. And usually I would say that's reasonably not easy, but it's reasonable to achieve that. It's definitely possible to do so through an appropriately risk-adjusted portfolio. And then finally, making recommendations. So I referred to early on in the presentation an investment committee, and most family offices have some sort of investment committee. And so that investment committee functions as a filter for ideas. And part of my role as chief investment officer is to bring ideas to the two principals, to the investment committee. And so we will talk those ideas over, whether it's a new fund manager, and I'm proposing that we invest in a new fund, whether it's a unique opportunity, a situational investment that we're looking at, possibly getting into, could be any variety of things. And believe me, I get an endless avalanche of investment proposals in my inbox, and I have no idea how these people find my email address, but it's just it's never ending. And my spam filter, I think, is like 1,000 email addresses long, because I'm always hitting please deny in the future, so please block. But understanding the family's interests and their risk tolerance is really crucial in taking the new ideas, because you don't want to be going to them with Bitcoin and all kinds of alternative ideas that are you should invest in luxury cars, vintage cars, or artwork, or if those are not interests of the family and they don't really want to be in that space, then taking those ideas to them not only is not going to be successful for you, but it will begin to irritate the family over time and make them think that you don't really understand their needs. So it's important to balance that. And that's, again, back to that emotional intelligence comment that I made, really just understanding who your audience is and presenting it appropriately. But definitely I have not only the ability to, but the mandate really to expectation to present new ideas to them.
I think if are there any other questions? If there are no other questions from the crowd, can I ask a few more questions?
Sorry. There's a bit of feedback.
Carl, if you have a lot of feedback, do you want to try typing your message on the chat?
Yeah, Elena, you can go ahead with your question first. I'll type in the chat.
Okay, sorry, I do have a lot of questions. So one of the other things is does the investment committee determine your KPI or your budget for the year? That's one thing. And the other thing I'm also a little curious is when you are working in a family office and with the varied amount of investments that you can do in a lot of different spectrum, how does the regulatory portion work? Do you report to one regulatory body, or you just report to the family, and as long as the family is okay with that, it doesn't matter if you're investing in stolen diamonds or something else, as long as it's lucrative?
Yeah. So definitely we sit down every year and we talk about, so usually in the first quarter, middle to the end of the first quarter, so usually February, March timeframe, we sit down and we have, I'll have a discussion with the two principals, and we'll talk about previous year and performance and what worked, what didn't work, why those things worked or didn't work, and what we expect to change in the future year because of that knowledge, and what we expect to keep the same. So definitely we have very meaningful discussions. Usually it's like a full day or two where we'll sit down and we'll go through the entire portfolio top to bottom. And just to give you a sense, we're invested in 60 plus funds, different investment funds. So to manage that number of funds and go through each fund's portfolio basically and look at what is in the fund. And then we also have some direct investments, equity positions and some startups, a couple of startups. And so when we look at, so I'll brief them on all that. So I've got a lot of preparation for that. We talk about the portfolio performance and then objectives for the next year. And then we also talk about KPIs exactly, and what it is that we're looking to try to achieve. Usually there's not a huge delta between one year to the next, unless there's something that went really wrong or there's a clear trend in a different direction from something. So usually things are pretty consistent from year to year. And then regulatory. So yes, depending on where we're domiciled, there is a need to register with the regulatory authority. Usually, if it's private wealth and the portfolio is not attempting to sell or offer advisory services to third parties, then usually there's no need to get any kind of a license or regulatory license or approval. It's just you need to usually register that you are, this is the kind of company that you are. But if you're not doing anything that would require oversight or regulation, then typically having it as that's why family office structure usually is quite nice, because it allows a lot of flexibility to do more or less whatever you want, because you're not taking on third-party money. It's usually when you're taking on third-party money or trying to sell funds that you end up under the regulatory umbrella.
Yeah, thank you. I think Carl has question in the chat.
Yeah, sorry.
So,
can I try again? Do you still hear the feedback?
No, it's great.
Oh, you're good now.
Okay, so yeah, I think speaking is easier. So just some background. He actually would like to have joined us today, but it's 5 a.m. where he is. So he's specifically looking to get into venture capital. So I told him I would ask, what are the things that you wish you knew as a newcomer to look out for, and some of the potential pitfalls that would be unexpected. Although I know you talked about some of the disadvantages.
So is this question, is your understanding the question from the perspective of working for a VC or working for a startup that a VC invests in?
Working for a VC. Okay.
So I've I personally have never worked directly for a VC. We have some VC-like investments. And I work with, I have a lot of interaction with VCs. So I'm probably not the best person to give a detailed answer in terms of what it's like to work in a VC or the pitfalls. But, some of the, I would say some of the challenges of working at a VC are really related to the underlying investment portfolio. So they're working with startups can be very challenging. In many respects, it can be very rewarding. And I sit on the board of two of our portfolio companies, early stage investments, both located in Switzerland. And I don't have much hair left to pull out, but what I do have left to pull out usually is pulled out because of the VC investments. It just can be a maddening experience to work with entrepreneurs when you have a conflicting view on things and you really feel like you're beating your head against the wall, trying to get them to really help them in their, achieve things that are in their own best interest, but they don't see it that way or whatever. So that's probably one of the greatest challenges actually working at a VC. Also pitfalls, it's just a different dynamic than working at a PE firm or than working at a big bank. It's fundamentally different. It's more relaxed environment in terms of, the work outfit, what you wear, the uniform that you wear to work. It's usually in the US in particular, it's very casual. And so in that case, it's quite nice. It usually relaxed, a lot of work from home. You may be doing a lot of traveling, so that may be good or not good, depending on what you want for your lifestyle.
Okay, so I think it goes back to what you were saying about how your culture matches with whoever you're working with. Okay, yes. Thank you.
Are there any more questions from the audience?
I think Adelina has one more.
Yeah, go ahead, Adelina.
Sorry, I do have a lot of questions. So I think one other thing that I think that will be my last question that I have on my notebook, is what kind of networking bodies do you use, or what kind of networking bodies do you have? I think because previously we were trying to find you on LinkedIn and we didn't find anything. And when I tried Googling, I didn't manage to get anything at all as well.
Yeah, so I'm hiding in plain sight. No, it really is. So for me, typically, so in Switzerland, for example, I was part of the Private Equity and Venture Capital Society. I think that's what it was called. And so there's a lot of people from actually a very broad range of companies, all the way from private equity down to VC and some banks as well. And there was a huge membership there. It wasn't very kind of focused in many respects, but it was good at least to get access to a directory of people who were in the industry. So I could reach out to different family offices if I had a deal where we needed to, for example, to bring in just another, say, $500,000 onto a fundraising round for one of our startups. I could reach out to a few of them and say, hey, let's, not sure if you'd be interested, but this is, there's a financing round that we're looking at trying to close right now. I thought you'd be interested, kind of a thing. So in Singapore, I haven't, just because I got here, I don't know, 4 or 5 months before COVID hit. Really moved here. We arrived in August, but I wasn't really up and running until October. And anyway, so because of that, I haven't really developed my professional network here yet. It's interesting because as working in a family office, there isn't the need to really market yourself. So traditionally, you think of a business, you're running a business, one of the core functions is marketing and sales. We are not doing that. That function does not exist in a family office typically, because the client is the internal family. So we don't need to be outward. We're not outward facing. And again, that typically is where you start to get into regulatory issues as well, as if you're marketing yourself, if you're trying to sell yourself. Now, and there are many family offices that have no website, and we're in that bucket, because it's a private thing. We don't need to be waving, our flag to the world saying, look at us, we're over here doing this fancy stuff or whatever. So, it's really just about staying focused on our core client, which is the family, and not bringing unnecessary attention to them. Obviously, the family will dictate what they want, what their presence is, what they want their presence to be. But if they don't want that, then I'm not going to try to get them to change that. So it's really more for me as performing the executive function in this organization to network myself, to build that network of people that would help me, for example, bring new ideas, maybe bringing deal flow to the family, to the investment committee specifically, right? So that that's really performing my core function. So that's the reason I would be doing networking. Yeah, and then I saw also, Jeremy, I saw your note about Bill Browder, which is it sounds like his story a bit, and it's really a fascinating story, I think, for what was going on and what's been going on in Russia for the last 15, 20 years. And I've been followed him very closely because a lot of what happened to him really kind of it parallels my experience with the Yukos and Hodarkovsky case. So thanks for bringing that up. It's a great read and a fascinating story that's kind of still ongoing.
I smashed through that book in about a day and a half. It's that usually biographies are a bit more of a slog, but this one, it's edgy your seat the whole time.
Yeah, it's definitely a good read, a fast read.
Thank you, Will, for taking us through the presentation and answering our very curious questions. I think we were already 4 minutes past 9, and we are very grateful for your time, especially answering some of our questions very transparently and giving us lots of advice. Yeah.
Yeah, thank you, everybody, and happy to maybe come back another time and talk about a more specific topic if some aspect of it. If that would be interesting, or just hopping on one-on-one with anybody who's on the call, that if you guys have specific questions or something you want to follow up on.
Yeah, awesome. So thank you again, and thanks to everyone for joining. If you'd like to check us out, please sign up for the form again. Just leave your email in there, and we will send you the email of our next event. Thank you, and have a nice evening, everybody. Bye-bye.
Thank you. Bye.
Thank you. Thank you.